Let's kick off with the most current results which have fed through. Finally, the banking sector has released full year numbers. It's Barclays Kenya that kicks off the earnings season. We're seeing an 11% rise there in profit before tax to 12.01 billion shillings, but gross pre-tax profit was slipping back by 11%. It seemed that a once-off item hit those numbers. I know that you just got the numbers in front of you, but any thoughts on those?
Thank you very much, Samantha. I just got the numbers, I think, about 2 minutes ago, but very quickly, I think I'm satisfied with that kind of performance by the fact that it justifies the price. My expectations were an EPS of about 1.5, and that's really where we've ended up at. And that gives us a return on equity of about 27-28% thereabout. Price to book of just slightly above 2 times. Return on asset is quite impressive, about 4%. So I'm okay with that. I think the share prices would be justified by those numbers.
But Barclays Kenya is not your favorite in the banking sector, and that's something that is a generally common theme amongst analysts who are looking for a stronger growth in terms of lending. We've got equity and KCB on your buy list. What type of expectations are you looking at in terms of the numbers there?
I think you've commented about Barclays Bank. On one hand, Barclays Bank was for a long time the most profitable bank in Kenya and probably in the region. And we've seen over time their strategy become increasingly conservative. If you look at just the last 2 years, the balance sheet has been relatively stagnant. I just saw the numbers, and the loan book was basically flat the last quarter. That's much expected. But for KCB, which is one of my favorites, is really a balance sheet story. If you look at the kind of profits that it's generating, it can easily grow to about $180 million if the new money that they got and they get utilized very well. If you look at equity on the other side, what I really like about it is a very responsive bank. It's a very dynamic bank. It has a CEO who is more of an entrepreneur. He's not your typical manager. It's the best money-making machine at the moment. With just half the balance sheet that KCB has, it's the most profitable bank right now in the region.
Let's move on to the power sector. We know that fuel prices are now coming down for a third straight month. That cut came into effect yesterday. Inflation is still sitting just above 18%. We know that the key lending rate is sitting around 18% right now. What is your outlook now for inflation and, of course, interest rates, given the fact that we know that fuel prices are now on a downward trend?
I think the recent fuel price review is good for the economy. It is going to benefit all sectors, especially if it contributes to the easing of inflation. Inflation is right now at about 18.3%. We are seeing that coming down. Expectations, we should be in the lower double-digit numbers, maybe 11-12%. Some of the optimistic experts are expecting single-digit. If you look at the interest rates, they've been coming down, edging downwards. Every auction that we've seen, especially even yesterday, we saw them coming down. And this is really good for the economy. In terms of my expectation for the year, I don't expect the interest rates to come down aggressively. We still have currency to maintain. And we still have election ahead of us. I expect a much better interest rate environment than what we had towards the end of last year, but probably in the double digits.
Either way, though, the fuel price is, of course, a key factor when you look at the likes of Kenyan and KPLC. What impact is a lower fuel price going to have on those two counters?
If you look at the Energy Regulatory Commission, it's really in a very delicate position because on one hand it has very immense political pressure to deliver lower fuel prices. On the other hand, it is also trying not to antagonize the oil marketers. So what we have is a pricing formula that has taken into consideration the margin that these oil marketers have historically booked in their books, and this is really good for the sector. Whether the recent fuel price is good or bad, in my view, it is really neutral, because the Energy Regulatory Commission has taken into consideration both what is happening on the exchange rate and what is happening on the global oil fuel price. I think really the intention here is to maintain the margins.
And of course, the concerns and risk factors around perhaps a supply squeeze in the Strait of Hormuz is a concern going forward for fuel prices.
Sorry, if you don't mind, please repeat that.
The risk factor that we need to attach to what's taking place with Iran right now in terms of the Strait of Hormuz is a key factor when we need to factor in where fuel prices are going to go further down the line. Yes.
My view is that we'll continue edging downwards in terms of oil fuel price. But that also depends very highly on what is going to happen on our currency. So far, we've done so well. There's a lot of pressure to maintain it at that level, if not better. And I think I expect a more neutral situation.
Pius, we can't ignore the huge chunk of trade that went through Safaricom yesterday. 37 million shares traded in Safaricom, and it seems that investors coming into the market and buying up all the shares on offer right now. What's driving the appetite for the share?
First, you have to consider that Safaricom is probably one of the cheapest telcos in sub-Saharan Africa. I think outside of Sonatel, I think Safaricom is the next. We are looking at EV/EBITDA of about 3.94 times thereabout. It has a return on invested capital of about 19%. Price PE is about 9.3 times. These are really good numbers, and what is really going on in investors' mind is they're expecting a much better second half than what we had in the first half, where profits came down by about 48%. If you look at what has happened the last couple of months, one, there was a 33% increase on tariffs. We've seen inflation come down. We've seen fuel price come down. We've also seen competition sort of go on a quiet mode. All these things are playing in favor of Safaricom, and I think investors are happy with the fact that Safaricom has been able to protect its market share. I think the latest numbers we've seen are ranging between 68–69%.
And as you say, the counter offering a really attractive entry point right now, 3 shillings 30 cents. It's on that note that we'll leave it there for today. Thank you very much for your time today. Pius Muchiri is a portfolio manager from Centum Investment.